Welcome back, everyone. This is the London session on TopstepTV. Just doing a little technical check to see whether audio and video are going out okay. I can see the video. Can everybody hear me? Can everybody see me? All right, it looks like we're all good. Right, so if you're here for the first time and you sort of stumbled across this video just randomly this morning, my name is Deeyana Angelo. I have been trading for 17 years. 12 years out of that, I've been trading futures, mainly specializing in energy markets and precious metals. Primarily crude oil and gold. Recently, for the London session, I've been trading a lot more platinum and copper. Full screen missing. Okay, there we go. Every single day, I forget to put the full screen. So I need a post-it note somewhere to remember that. But thank you, Bruno. Thank you for reminding me. Bruno is our lovely moderator. He is the one who picks questions from the chat for me. And he makes sure that we're safe from the trolls, right? All right, so let's have a look at what's going on. Let's start with platinum. Platinum is rising up to some supply areas that might be of interest. So one line that I can see that was already reactive a while back was 10.55.3. Okay, today let me just have a look at where we're opening in regards to the value area. So we opened up below value, pushed inside it pretty much immediately, and then just carried on going higher. Having said that, we are reaching some statistical averages, algorithmic ranges, however you want to call them. And at this point, I also like to have a look at some options data and all of that. So I have 1050 on some of my data here that is kind of automated for me, but obviously you have to know the context behind what's going on. So yeah, 1050 ballpark as maybe a little sell zone. So we may be in for some more upside movement before we hit that. So certainly some interesting levels up here for a bit of a fade in platinum, but nothing is set in stone just yet. Now I want to remind you that this is not a signals class. I've seen some posts on Twitter in regards to some of our other on-air talent, and don't follow people. Like, let me remind you that YouTube has a 6-second lag. And if we're going for, some more scalpy precision-like trades, you can't really follow anyone, So this is meant to be more of an educational class of how we approach the analysis and the decision making behind the trades. It is not like, oh yeah, D says go short platinum, therefore if you lose money, well, let's go after D. It's about just developing your own plan, however, seeing how systematic we are in something that is working for those of us who have done this for a very long time, right? Oliver wants to know, was there any session in the past where options and options levels were explained in detail? I do not want to ruin the party. I can look back if possible. I don't think we explained it like in detail. And honestly, if you go too much into options detail without knowing much about them, it can be a bit much. That's why there are services around such as, we've been talking about Mentor Q yesterday. If you were watching Jared, is it Jared R, I think is his name. So he also mentioned them, right? So what services like TraderTainment and Mentor Q do, they effectively simplify the options data down to like a single line on the chart. And that's very helpful if you just want to look at where the interest of calls and puts is. And MentorQ also has like some other things that they add, but those tend to line up very frequently with some of my levels that we already talk about. So all I'm doing is just looking for that additional confluence using the options chains. Now, why are they important? Because 0DTE options recently, especially in the last sort of 3-4 years, they started to account for a vast majority of intraday volume. So naturally, if you're not looking at them, you are then not adapting and you're not going with the times. Similarly on Twitter, on X, yesterday I was seeing some posts about, the option 0DTs, they've ruined everything. And it's like, no man, you need to adapt. Like, what sort of an outlook is that? You're not a trader if you're not going to adapt with the ever-evolving markets, right? Now, for me, I trade crude oil. So back in the day when I first started trading it, and all the way up to this year, I used the Canadian dollar NY cut options chains to find my levels. Now, crude oil did and does have its own outright options, but the issue there was that it didn't really comprise a lot of volume intraday. So it was like, yeah, you can kind of look at it, but it didn't matter much. However, there is a time of day still that has a big effect on the price, and that's the so-called NY cut option expiry. Now, what is that? That is basically forex options that expire every single day, and they have their own levels. And why is the Canadian dollar important for crude oil? It's because Canada is one of the biggest exporters of crude oil in the world. I think they're like 6th or 7th or something in the world. So that's very, very relevant. If we now look at what's going on with crude oil, specifically, as of July the 23rd this year, in addition to the regular sort of monthly options that they still had, but they, nobody was really taking advantage of that. Maybe some hedgers and producers and users of crude oil, but it wasn't something that your regular speculator would be looking for, right? But since July, they introduced, when I say they, who's they? The wizards. I mean, the CME introduced new bi-weekly options on crude oil, bi-weekly. So now they run Tuesdays and Wednesdays every week, in addition to the monthly option expiries that we then have every third Friday. And then on top of that, you also still have the Forex NY cut in Canadian dollar that can still add a lot of, you can put a wrench in the works. Like, let's say you're looking at a breakout out of the initial balance, and then the Forex option expires around 9 a.m. Central, and suddenly you're like, what happened? That's what happens. So if you don't know that is just a trader not being aware of the market mechanics that are in play. So when it comes to the options data, you don't need to go down the rabbit hole of, what's a bull put spread, what's a calendar spread. You don't need to go that deep into it if you don't want to. But just know that there are services out there that can offer these levels, and you can just use them as orientation. Just like any other level, they can act either as support and resistance or as a springboard, right? So it doesn't have to be like, MentorQ says there's a call resistance up at 1050, so therefore I'm always going to short. It's not that kind of an exercise. So if your analysis and everything else that you're doing still says, okay, well, we've come up a lot. Like, let's say somebody's asking for NQ, tech at 212 is asking for NQ analysis. Now, I'm not a core equities trader, guys. Like, I do know a lot about them, and I have traded NQ. But I don't like it. NQ is like, ugh, it just gives me hives. And so here's the thing, when you're trading and you're trying to get consistency in your trading, you don't want to trade products that poke into your emotional parts of the brain. They are effectively bad decisions, right? Anytime you allow your emotions to get involved, you're going to make mistakes. Now, most people are not enlightened enough to go through those mental triggers and just go, okay, so when NQ smacks me on the face 3 times and I then go on tilt. No, what they will do is they would just be like, oh my God, NQ just took all of my money. I'm going to lose an XFA. So F it. I'm just going in with 10 lots or 3 lots or 5 lots. Like, that's a lot of damage that you can make. Just even with like 2 full NQs, you can really sort of do a lot of damage. So something that I like to do with my traders is to move them away from NQ. Unless you're like super consistent and profitable and you're like a very stable person emotionally that doesn't really care much about money and about, we all have different views about money. And every time people come into trading, presumably it's because maybe you want to, become more wealthy, maybe you want more resources. However, it never quite works out that way. You realize that, Nick for a Tick has joined us. Hey, man. What's up? How's it going? Yeah, why are you awake? Seriously, man. That's late or early. Depends on how you want to look at it. Yeah, so with the whole emotionality around money, a lot of people try to perceive the market as something that is going to easily bring them abundance and wealth almost overnight. And then very quickly you realize that that's really not the case. However, if you then have any hang-ups about money, that's going to come and smack you in the face with every trade that you do. So this is why I'm not too keen on seeing people trade NQ. And, there's very few people, like Nick for a Tick is one of them. He is a very stable guy. He doesn't take himself too seriously, but he's very intelligent. He's very stable and he can make it work, right? But a lot of the other people, I'm sorry, but it's just not the case. There's a very small percentage of individuals, even if you're consistently profitable, at some point, NQ is going to start to annoy the hell out of you because it's a chaotic instrument. So before I kind of go into the analysis of that, just wanted to put this out there. My dislike for NQ. All right, so on the weekly chart, we seem to be floating around some supply levels and also having a bit of a distribution moment in NQ. I think we have some earnings. Again, I don't track that deeply, but again, Nick is in the chat, so he can maybe remind us if we have some earnings. Was it Tesla or something, or did that already happen? I have no idea. So yeah, let us know. But yeah, if you do have earnings today, then sometimes the whole day is just a whole bunch of nothing. So there's chop, chop, chop. Why? Because they're waiting for new data to come out. But just purely from a technical standpoint, where we are right now, we're building quite a bit of volume at this level. Now, this is an equity index, so take this with a pinch of salt. This could mean distribution phase, I call it the phase 3, before liquidation phase. So some sort of a short coming in. But again, equities, they love to do this reaccumulation and then they shoot up to all-time highs. Where air horn, right? So I would be a little bit careful with shorts. Yesterday we had a bit of an interesting day, I would say. Somebody came up with some Apple news, how a whole bunch of phones are going to be cut out of the supply next year, so they're not going to have as many iPhones floating around. And that sent the markets just tumbling down. It was an interesting day. I did end up making cash on what was I trading yesterday? Gold and platinum. And in my XFAs, everything went fine. I was doing some really nice trades, but then I went to get involved in a gold trade, and I got absolutely chopped up. In the live trying to catch that. So then I was like, you know what, F this, I'm going to platinum. And then I did a beautiful short platinum trade, held it until the cows come home, managed to bring the day back, and in the live I ended up from minus 600 up to 250. But on my Express accounts, XFAs, I actually did a pretty drama-free day. So, there's that. Something about that live account that just maybe makes you make some different decisions. I think even Nick was talking about that. And I was looking at the tape and everything. It is different. It's very different. The fills are different. The feel of the movement is different. I don't know why it should all come from the same data exchange, but somehow, just somehow, it's a bit it's a bit strange. All right, so NQ. Ugh. Let me pop a beta blocker before we start. Or maybe I need more coffee. I don't know. which one is it going to be? NQ. There we are. So we're opening strangely below value. All right. So I'm just going to do this quickly because I can't be drawing everything on NQ. So just going to quickly drag over my other platform. We're not going to stay here forever, but we are reaching an area of, this is M&Q, so it's the first one I could find. So London value low is in the vicinity here. We have quite a bit of volume up top inside the value. So this kind of speaks to that short potential sentiment that I'm seeing today. So, you know, dare I say it, short equities. It's going into a failed auction right now. So you can see the red box is the, you know, the initial balance. We almost touched the London value low from yesterday. This is just London levels. This won't be relevant for the cash session because it's got its own levels. If you want to see where that is, well, we're actually slightly above that. And it's a big, big value. So I wouldn't necessarily take the open sentiment based on value today as a good indicator. I would be focusing on the TPOs, so whether we extend the initial balance, whether we're staying inside it, what does the price action look like, and all of that good stuff. So yeah, short biased on NQ. I do trade DAX quite a lot. We don't have that on Topstep yet. You know, hopefully someday in the distant future, we will get DAX and Eurex products, and then we're going to have Bund and everything. Not that I trade fixed income. I actually hate it with passion because it just doesn't move. I think fixed income is more for, if you have like a monetary policy or something, it will move a lot. But if there's no monetary policy, you're better off just doing like spreads and stuff and just doing it, you know, for income or something. But I remember when I was put on a fixed income desk, I think that was very early on. They were like, yeah, let's do fixed income. Let's do like spread trading and blah. So I was sitting there and I was just like, this doesn't move, man. Like I'm literally just gonna dry up and and you know, one foot in the grave sort of thing. I couldn't do it. It was too slow for me. Even Euro stocks, didn't look at them recently, but back in the day, Euro stocks were so slow. I put on a trade, went to lunch for an hour, went to the gym, because I used to do like gym in between, you know, whilst I was on my lunch break, I would do a gym session. Then I would come back to the office, and I was like, it's moved like 3 ticks. 3 ticks. Yay. So I look for smoothness of movement, which NQ doesn't have. It's very erratic. It's a little less erratic for this time of day. Excuse me. But it's during New York, it's just absolutely bonkers. So I can't deal with that. Not at my age, anyways. So I gravitate towards products that are less crazy, but it still can offer you about 180 to 200 ticks on average in a session. And, you know, that would be my view. So, yeah, NQ, a little bit short bias today let's see what happens. You know, I'm not going to be trading NQ today. But let's move on to something else. Let's have a look at copper. Copper's been very, very nice. One of the trades that I did in an XFA yesterday was a copper trade. Can't remember, was it doing the long, the micros or full? So I'm not quite sure. Let's have a look. I think I was maybe on micro copper. Oh no, this is NQ. Oh God, why does it do that? It jumps. There it is. Right. Okay. Yeah. So I was doing. This is the daily chart. That's very messy. Let's go down. There we go. Okay. So that was a copper trade that lasted for 2 hours, went in with 2 contracts. Like very drama free, right? Like you can't ask for more out of a trade. Very little drawdown. It just went straight into a nice movement up. I did exit at VWAP. I can see that it, because that was my target, but I can see that it overshot a bit. Now, from what I remember yesterday, I think there was like a core resistance level there. So, unsurprisingly, it overshot VWAP and then turned around. So again, that confluence is very important. So we'll see what happens with copper today. I do have a couple of levels around 439.05. So I am a bit short biased on copper now. Let me remove these chart executions because to me, they just clutter up everything when I'm looking at the weekly chart. So let's have a look at, again, change this. Nope. Someday I'm going to learn how to use this platform. Granny D in the house. All right. Weekly chart, we're kind of in the middle of nowhere, aren't we? We have some demands again lower down, some supplies higher up, very, very thick volume in this area. So yes, that's not really, it's not really telling me much. So let's go to the daily chart. Daily chart accumulating, right? This could be an accumulation, but for now it's a range. So until we break out of that range, that's what we're working with. It's a very, very large time frame. So point of control from the visible range is right around here. We're having trouble around it. Again, the intraday may be a short that would speak to all the other things that are happening. 30-minute time frame, again, that uptrend that we saw in the pre-market after Tokyo ended is now waning, so that might be the same sort of outlook. We did open above value for London from yesterday, but we're still inside the initial balance. So that means that the other time frame participants are not here yet, at least not for London. I don't like the buying wick. This big buying wick is a bit troublesome. But I am still short biased here, at least down to VWAP, which is, I use the overnight VWAP for London, 437.15 is where that is, 437.15. Yeah, and even on this chart is around about the same level, so they're all matching up. Now at this point, what I want to do, I kind of go down to lower time frames. I start to look at the structure of the price action. Where are the highs? Where are the lows? Are we making any new lower lows or not? Are they buying it passively? Are they buying wicks? And if I don't see anything against my trading idea at some point, this could be a trade, right? I mean, granted, it's a little bit early for me when it comes to my stats and stuff. I like to trade copper sort of into the overlap, and then I typically like to hold that. It is an unusual thing because overlap generally brings a lot of volatility into some trades, some instruments like GC, for example. So it makes it really hard if you're going to carry over a position from London into COMEX. What tends to happen is that increase in volume will just kind of smack you on the face or erase most of the profits that you have. So even if you survive, it's going to be one of those like suspense drama moments. It's like, will it live? Oh no, what is happening? And as always, I say that you cannot trade from the position of fear and doubt. You have to be calm. You have to make sure that the emotions are not really involved in the whole thing. You can look at it from a point of view as working with your emotions. So recognize the emotion, but then don't just keep going, right? Don't just kind of go, oh, another trade. Whenever you feel an emotion, you're like, what's that all about? Why am I feeling this? What is causing it? It's a big sort of introspective exercise to constantly be on the sort of like a defense, because you're like, somebody's attacking me, like the markets are trying to attack me and my well-being. Because here's the funny thing. Our brain can't tell the difference between actual death threat and some money lost. Never ceases to amaze me. In our little primitive minds, the back of something that's not really connected to the prefrontal cortex, you're kind of using your limbic system and stuff. You can't tell the difference from a lion chasing you and losing a little bit of cash in an XFA. So your brain will kick off a fight or flight response to make things much more complicated than they need to be. But if you start recognizing that, and if you recognize your triggers, Hogue always says, let's try to be humble, centered, and grateful, right? Grateful, humble, and centered. That's what he says. Take that to heart, like literally, right? That's a big thing to have, that calmness as a trader. People always say to me, Dee, you don't really get excited. How am I supposed to get excited over a trade that I've done like for a millionth time? I don't care about the outcome of the trade. I don't care about anything else apart from, did I follow my process? Did I stay aware of my own mental triggers? Did I take profits on time? Because I have a problem taking profits. I don't have a problem holding trades, right? And many people have the opposite problem of not being able to hold trades. Most of my trades will go into at least 40 ticks profit, right? On occasion, I will also get big home runs. So I'm fairly well versed in finding a level that will do that for me. But unfortunately, what tends to happen is that I look, sometimes when I'm off my game, I look for those all the time. But if I then look at my stats, most of the trades at the top, whenever I'm at the top of my game, I kind of take about 40 to 45 ticks. So what I've done over the years is to put things in place where I get myself out of a trade when there's nothing else going on, right? So for example, if I'm already sat in a short copper trade and we get a bit of a trend, and on this, let's use a 2-minute chart, because on copper, it's a pretty slow moving product, so it doesn't really require 100 ticks chart. So yeah, if you see a nice little trend down, we keep going, and now I'm kind of sat with like 45, 50 ticks profit, maybe even 60 ticks, so we're kind of getting close to the target of 70 ticks. But suddenly something happens, it pops back up over these 3 lines. Well, what am I going to do? I'm going to be like, I'm just going to hold that. If I'm off my game, that's what I will do. And then I will go up to the 30-minute chart and I'm like, nah, still looks all right. And then I just watch it go completely against me, only to end up with like a scratch trade. So over the years, I recognize that as a huge issue, right? And so I have all the tools in place. Time of day is one of them. So if I get to the next, what I call the day trading time zone, I will usually exit that trade. So there's a time stop, there's a price stop, and there's an early exit. And all of that with me, it has to be systematic. I cannot be intuitive, because intuition, I'm sorry, but it breaks down. As soon as you have like high pressure environment, everything, you know, coming at you from all sides, intuition does not work for me, okay? Maybe it works for you. You do you, right? But for me, I need to make everything as consistent, everything as systematic as I can possibly have. I see some other questions. Do I have a time of day approach for GC like I have a CL? I have a time of day approach for everything that I do. And GC, actually, because it's also a Forex linked product, it's very much linked to Australian dollar. Why? Because Aussies are big exporters of gold. So likewise, there are some options on Aussie dollar that occasionally can put a wrench in the works around the 9 a.m. Central Time, and into the Euro close as well. But we also have outright GC options that are now, again, comprising a lot more of intraday volume. So therefore, I look at those too. So time of day, typically, I will look for some sort of a reversal after 9 a.m. Central. For London, I will probably look for a reversal around my 11 a.m., which is in an hour. So basically going into the overlap, as people start going off to lunch, they need to offload some positions, and typically you will see some sort of a reversal. So GC follows that perfectly. I even have that for ES, which I do trade quite a lot, and then NQ kind of follows that pattern. Typically 2:30 p.m. is when we start to see some potential reversals. Now, whether they carry over into power hour or not, that's a little bit different. That's contextual. And whether it's a long or a short, what do we have happening, all that good stuff. So yeah. All right, gold. Goldfinger says, can I look at gold, please? Yeah, so I'm going to keep an eye on this copper. So I'm going to see what happens in this next sort of 15-minute candle, because I would like to see a bit of a pullback and then a continuation, because for now on copper we have 438.10 acting as a support. So I don't want to be doing a breakout trade here. I probably want to get involved somewhere around 439s if I can get them. If I don't get it, it's fine. We just stay out, right? Again, this is not a signals class. This is a class where I want to show you how selective you need to be. So rather than just sitting at your desk and going, coffee, espresso shot, click, 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 boom. I literally sit down, and sometimes I will sit here for 2 hours, 3 hours, 4 hours, no trade. I mean, I'm not going to sit here, right? I will go do other things. I'm not a lunatic. But sometimes I will wait. I will wait for several hours before my trade sets up. And if I don't see anything in London, I will absolutely walk away, have a big break. That's a tip of the week, take a break. It's definitely, most definitely a thing that you need to develop as a trader. If there's no good setup, don't click buttons. Just be more selective, quality over quantity. Process over everything. It is the secret of good trading. So gold. Let's start from the weekly chart as always. Weekly chart again. Do we have anything? We have Hogue's weekly kickoff level that seems to be causing some trouble here, right? I mean, Hogue's levels just, man. I'm always blown away every time he gives us the weekly kickoff level. The price gets either right up to it or just over it and then turns around. So that man has to have a crystal ball somewhere. I will not take any other explanation for an answer. But yeah, so from the weekly chart, we are in a thin volume area, which could mean a quick moves either side. But quick on a weekly chart is a rather fluid concept. Yesterday, big sell-off. Today, buyers have stepped back in. We are opening. Interestingly below value of yesterday, and I mean, wow, that was a huge jump off a cliff, wasn't it? So I have the value low from London at 27.62.8, and I actually have some algorithmic ranges coming up ahead of that. So maybe up to 27.57. And then potentially that could be the start of a bit of chop. Let me have a look at some option levels. Yeah, so that sort of matches the expected sort of algorithmic move up to that area. Again, it could overshoot it just to get up to that value low. But right now, I don't see any potential level, like going into a breakout during London is a low probability trade. Okay, you're just asking for some sort of a pullback down to some more sensible levels, because London is not the main session for this, even though it can trend. A lot of the times it is not going to be it's not going to be lucrative. It's going to go into a neutral trend day. If you look at hedge full stats for London, so I'm just going to have a look at that. No, not edge wonk. I want edge full. So many edges. Edge wonk, edge full. And what do I need? I need futures and GC. And then I also need the London session. So let me change those quickly. That's 3 a.m. Eastern. And then 8:30 as a closing time. So what I'm looking for here is the initial balance break. Let me remove some of this stuff. Well, actually, whatever. I have like bookmarks up there, but whatever. So what am I looking for? I'm looking for price action, initial balance breakout. So let's see what the stats say. I mean, look at that. Single break 56%, but double break 42%. I mean, that's pretty much 50-50, right? It's just not very conducive. And now by weekday, it's like on the 50-50 mark. So that's just terrible stats. Therefore, breakouts, even if we go up, I don't want to be flipping a coin. I want opportunities that have more than 50-50, okay? A lot more, like 70-30, 80-30, and stuff like that, if I'm gonna do a breakout. So for now, like I said, I'm looking for slightly higher levels close to that weekly kickoff high at 27.60. So there's a lot of confluence up there. 27.57.8, then value low at 27.63. So all of that is definitely a better choice to see what happens. And even if it's just a springboard, even if we kind of like go higher, that's still a good thing to have. All right, let's have a look. So I did that one. So what is your market instrument? How many? Okay, so I started off as a euro dollar trader. Now, I'm going to remind everyone I've been doing this for 17 years. So I would not advise you to do what I'm doing. Why? Because it takes a lot of experience. So basically, I started off with euro dollar for 5 years. That's all I traded. I started in like 2007, 2008. Made my first 6-figure account, and that was amazing. I quit being a session musician because of that. And then I thought to myself, I want to go into prop. There was also a matter of me not knowing how to intraday trade at the time and wanting to learn from the professionals and wanting to go into futures. But I didn't know how to do it by myself. So I went and did an apprenticeship in a Chicago firm. So they taught me the little bit of market profile, a little bit of volume profile, but they didn't go into like super detailed explanations. And they sort of just wanted us to have like a basic knowledge about the markets and stuff, and then it was like off you go, you create your own strategy. But at the same time, a lot of them were using volume and market profile, and as you got to the funded level, kind of a junior funded level, you had people who were senior traders who were always happy to help, right? And this is what we've got now on TopstepTV. It's exactly the same concept. It's more experienced traders helping novice traders. I had the privilege to work with some amazing people. They were very kind, but also some people who were not that kind. So I distinctly remember this one guy, bit of a dick, I've got to say. So, odd one out in the sea of nice people. So anyways, but he was completely correct in what he said to me. So I I was doing my intraday trading the way I thought it was supposed to be done. So I was like in and out, in and out. It was like a trending move on crude oil. And I'm like going in, then taking 10 ticks, then going out, then losing 6 ticks. Then I went in again and I lost, I don't know, another 3. Then I went back in and I made another 12. So sort of working, but very haphazardly trading, right? So in the end, I'm in, I'm out, I'm in, like just like hopping around like a complete idiot. And he goes, right. So after all of that, how many ticks did you take out of that? And I looked at the net number of ticks, and it was like, I don't know, maybe 10, maybe less. And he goes, yeah. So now you've paid the broker a lot of commission, so he's gonna love you. In the meantime, I just sat on one trade and made 60 ticks in the same move. And I was like, oh shit. He's got a point. And then I worked to transfer what I was already doing as a swing trader, holding trades for longer, but just using that higher time frame analysis to my great advantage, right? I'm very good at analyzing what's going on with higher time frames, and that I've been doing for 17 years. But when I went to intraday, it was all quite a lot of stuff, right? So I was like, bit too much. What do I do? So the first thing that I did was started to use average daily ranges. But then I ran into an issue. Again, this is how my method came about, because I needed it. On days when we would go into a trend and we would overshoot that ADR, I would be like, well, what do I do now? Now, usually when I'm on my own stream, all of this will be accompanied by a lot more profanity, because that's just how things are. But here, I'm trying to be, a bit more PG, I suppose is the word. So yeah, I worked very hard to add things in. And one of the reasons why average stash and ranges exist is because I would have days where ADR gets overshot. And then I'm like, I have no levels. What is the reference here? I have no idea. So I modified that to only use regular trading hours. Okay, so only regular trading hours. And then I use the same concept of exhaustion around those levels. It's why they work so well. But even if you don't have the overshot ADR, you can still have a SR that still brings a reversal intraday, especially for the London session, when it's very unlikely to have a full 24-hour movement in, from Asia to London. That would be an odd day for me. So anytime I see that, anytime I see something overshooting ADR during London, I'm like, what's going on there? And immediately that means I shift into the abnormal outlier days sort of strategies rather than chasing reversals constantly, even though they can still be a thing. But at that point, you probably have a better chance of a single direction day. So looking for pullbacks to get in with the direction rather than fighting that. Just little things like that make up the systematic part of my method. So why am I going into my life story? Because I trade multiple products, right? But I look for some very, very specific setups that I've been staring at for 12 years now. 12 years, right? This is why I can look at gold and go, meh, don't want anything here. I'm thinking higher up. Until it gets there, I've got nothing else to do, right? If I look at copper, I'm like, yeah, that's a possibility. I just need a good trading location, which I don't have right now. So, I have two options, go into a breakout trade or wait until we sort of start ranging a little bit and then try and snipe it from the top of the range. So I have a level, I have some price action structure there. I just need a good trading location there. If I don't get it, again, I'm not going to cry about it. This is just one of a million trades that I will do. But this is the reason why I can jump ahead. Also bear in mind that I am jumping through the products that are my specialty. So all of these, platinum, copper, gold, crude oil, RBOB, they're all a part of energies and precious metals. So I'm not jumping out of my lane to just go, hey, now I'm going to trade lean hogs or corn or something. those can be lucrative products for some people, but I know nothing about them, right? I don't know anything about lean hogs, apart from the stuff that I've read in Series 3 book. I don't really know anything about corn seasonality or how that affects producers or users. I don't know anything about that. All I can do is just maybe use the technicals there. But would that be smart after me having, 12 years of trading some very close specialties? No, it wouldn't. It would be focus dilution. So, for example, whenever I see people trading 20 Forex instruments, trading platinum, trading gold, trading ES, trading NQ, and then I'm like, well, how long have you been trading? And they go, oh, a year? That's never going to work, right? Why? Because you've diluted your focus to the point that you have no idea how each of those products moves, and you're just grasshoppering from one to the next to the next. What I did, however, I spent, because of the time that I've experienced that I've had in the industry, I've spent probably about anywhere from 9 months to a year or over trading just one thing, right? So when I started, I traded euro-dollar for 5 years. That's all I traded. And only probably in the last 2 years from the start of my sort of trading journey, I added in euro-yen. That's a Forex cross pair. And I added GBP New Zealand. But that's you've already traded for 3 years, 4 years, and then you're adding a couple of things. And again, I didn't trade all of them together. I was looking for which one looked the best. Now, when I went into prop, they first put me on an ES, on an equities desk. That didn't work out. Then they moved me to a fixed. Why? Because it was so slow. So I complained that it's slow. Then they moved me to a fixed income desk, which was even bloody slower. So I'm like, what are you guys doing? You trying to kill me? And then they're like, okay, maybe you like the more volatile products. So why don't you go into the equities markets? And I'm like, equities? Sorry, not equities, energies markets. And I went, well, what do you mean energies? He said, crude oil, nat gas and stuff. So I looked at all of those, and I gravitated the most towards crude oil. So from there on out, I started trading crude oil only. And it was probably, I don't know, maybe a year before I even added anything else. And at that point, I added gold. It was kind of moving similarly, but, again, it had its own quirks, but there were a lot of parallels in the way gold operated. So all of that meant that I'm now trading one product, then another one 5 years later, then another one a year later, and then adding and dipping into different similar products every so often. So that's why I can jump from one thing to the next and not get completely, completely blindsided, lost and stuff. Because I look for very specific setups. It's a very systematic method. And I want to see strong setups, right? I don't want to trade just one instrument where, for example, yesterday, crude oil was all wrong for me, right? Crude oil yesterday, we had, and again, one day I will learn how to use this platform. Not interval. Oh, for Christ's sakes, come on, Dee. Wake up. There we go. Crude oil yesterday, 30 minutes. Let's go. This is old stuff. I didn't trade it yesterday. Here we go. So we had sort of a value area ballpark. I mean, I can't remember exactly and I can't be bothered, but I know it was something like this, let's say. Just looking at the previous movement and eyeballing where the distribution curve might have been. And then what happened is that we went into an early value acceptance immediately. Now, every time I see those, I'm like, that's highly suspicious on crude oil. Early value acceptance within the first 30 minutes, most of the time won't have the full rotation to the other side of value, right? It just won't. If it happens after NY cut, so after 9 a.m. Central, it has a higher chance of giving us a full rotation. So I don't want to see this. And what happened? Well, there was actually an HVL level here at 71.50. Again, taken from Mentor Q. and it just hit it to the tick and just reversed. Every time I see an options level inside value, that's a bad setup, and I don't want it. And then around about that time, we had the crude oil inventories. So it's like, can it get even worse? So wrong time of day for value acceptance. Options level inside is a potential resistance. Would it have been clever of me to run a breakout? Well, no, because I would have gotten smacked in the face. So all of that made me think that it's all happening at the wrong time of day. So I didn't trade crude oil yesterday because of that. And also Wednesdays, you guys know that they're my least favorite days to trade crude oil because we have the inventories and this sort of thing happens. We effectively have one decent move and then it just gets stuck in, a 30 tick range because they already made their cash here. So they're like, well, we're just going to go to the strip club or something with all that cash that we just made. So yeah, and then overnight, obviously, it started kicking off into a trend. I was asleep. I didn't look at that. I was actually really, really tired yesterday. I was super excited for Anne-Marie to be on my show, so I didn't actually sleep much the previous night. And I was just wiped at like 9 p.m. I was already in bed. It was pathetic. But there you go. So yeah, things happening at the wrong time of day for me have a big weight. So time of day is a huge thing of a huge part of what I do. And it works as a time stop, and it works as a sort of beginning of a new setup potential, right? All right, let's have a look at some more questions. Hi Dee, can you confirm what times are usually classed as the main session? I keep seeing conflicting info. Yeah, that's because there's actually 3 Asian sessions. So you have Australia, kind of Sydney Exchange that starts the earliest. I do believe they started like 11 p.m. my time, which would be probably 7 p.m. Central, if I'm not mistaken. Or is it like 7:30 or something? Anyways, it opens before Tokyo. Tokyo opens up at 8 p.m. Central. And then it runs all the way through to, let me do the time conversion. So that's 7 a.m. my time. So 1 a.m. I think it's when Tokyo closes. And then you have an awkward hour where you just have the Frankfurt Exchange open and then London kicks off. So the reason why you're seeing so many conflicting information is because the third exchange is a Shanghai exchange, and that opens about 90 minutes after Tokyo. Now, I like to run my Tokyo calculations for all of these lovely distribution curves and everything I've got on Shanghai Exchange, right? So if I look at my settings quickly, I know many of you do have the Blatic indicators anyways, so if you look at where it is, it's 1:30 a.m. my time till 7 a.m. That's Shanghai open all the way to the close of all of the exchanges, okay? So that is the thing that has worked the most consistently, to use all of the 3 exchange volumes and then typically look for some sort of a breakout or breakdown or a reversal, depends on where we are. Again, it's going to be a matter of context. So that's why it's so conflicting. But Globex session literally just means overnight from the moment that we open after the maintenance period. That's considered overnight. But yeah, so unless you're like trading Asia-specific setups like Nikkei, you probably don't have to be super exact on what exact calculations you're going to be using. For the rest of it, you can just have a look at whether there's any setup that you can run as an overnight swing, for example. So that's something that I've done in the past, especially with Nikkei this year. Yeah, and then just let it run, go to sleep, see whether it's still there, done. However, on these accounts, if you don't have a big old fat buffer, I would probably stick away from Nikkei because it's so expensive. We don't have micro Nikkei on Topstep yet. It would be great if we did, but we need DAX, we need Bund, we need micro Nikkei. It'll come, okay? Let's just be patient. All right, let's see. More questions. Okay. Trinka. Sorry. So it says, Mark Stoker D, will you be the group coach also? Okay, so I have 3 other businesses, right? So I have a software development business, I have a small recruitment business, and I have my own coaching business. I'm not sure that okay, I'm going to be totally honest with you guys. I'm not sure how financially lucrative would it be for me to suddenly become a VIP coach for TopstepTV. That would probably have to replace the income that I have on the other side, which is, really not that trivial. So I doubt it. I don't want to do that because I spend a lot of time with my own clients who have been with me. I have a personalized coaching approach, not like a group approach coaching like we do here. I literally do what the universities will do for mentor versus student. If you're trying to bump up your skills, you're not going to go to your mentor and your tutor and go, so what thesis do you think I should write on this particular subject? They're going to be like, well, you come up with your own thesis and then we'll discuss. So that's what I've done for my clients. And obviously that costs a little bit of cash because it's my time. And because of that personalized approach, dogs. Someone was at the door. Do apologize. A multi-dog household and all of that. It's like doggy daycare in here. Yeah, so the personalized approach, which is the reason why my students do have quite high results, is because I choose who I'm going to coach. I'm not going to be able to do that as a VIP coach in Topstep. So that's out of the question immediately. Second, I would need to spend an extraordinary amount of time to review 50 people's plans, which is something that I do as a part of my coaching. So I'm not really interested in doing that. I would rather just be a trader than a VIP coach, because I think people derive a lot of use and value from what we're already doing. So I don't think that's something for me. But yeah, and again, I feel that would actually be harmful for my other side of the business as well. Not fair to my current clients. Suddenly I'm coaching 50 different people, and the way I do things, I know that I will be asking for stats. I will be spending a ton of time going, well, let's get this sorted out. Let me see your plan. How are you doing the plans? I know myself. When I'm coaching someone, I'm all in. Okay, and that's not really what they're aiming for. They're more aiming for like, group coaching sessions. We help everybody out. At the same time, you can ask questions like you do here already, right? You do it here already. I don't see the need for me to run a VIP group, right? So I don't think that that's something that I'm interested in, like very, very frank. And it's probably going to be a no, okay? Let's just put it that way. I'm more of a trader here for Topstep, right? Yes, I'm an educator, absolutely, but I'm here to talk through my setups, and you can take any sort of value that you think you can derive from it. All right. Yesterday had a bearish engulfing candle on gold, possible head and shoulders on the daily. I don't use the concept of head and shoulders, right? To me, anytime somebody mentions chart patterns to me, that's like, you might as well say dragon crapping under a tree pattern. I don't care, right? Yes, they might work, but the problem I have with them is that they're very wishy-washy. Where the hell do you enter? How do you enter a head and shoulder? On a breakout, is that a good idea on an intraday level? If you're seeing that on the daily chart, because I don't think so. If you see a head and shoulders somewhere on a large time frame, you're going to get your face smashed in because it's going to be a gold whip into COMEX or into post and cut or whatever. And you're going to be like, but it's a head and shoulders. Why didn't that work? Because you're looking at a very large time frame without having parameters to enter that on an intraday time frame. Okay? So to me, That is not really the way I do things. I am, again, very systematic. If I can't explain, let me ask you this. If I can't explain something to a machine in code, I don't want anything to do with it. Now, of course, there's a discretionary side of what I do, but at the same time, the discretion only comes about the decision of whether I'm going in or not, right? The rest of the levels and the sign, signal, trigger that I need to have, that's not very discretionary at all, right? This is why I call myself a systematic trader. But when you are supposed to explain something to a machine, again, I have a software development company. We've coded a ton of algorithms. We've even licensed algorithms before. So now it's mainly just the trading indicators that everybody knows us by. However, how would you explain to a machine head and shoulders pattern? What, use a zigzag to look for a high, then a lower low, then a higher high, then what? Like low, and then it's just, and then where's the break? Is it at the break of some random wishful thinking line? How do you explain that to a machine? You don't, right? That's a human-based thing. It's a human pattern recognition. It has its place, okay? I'm not saying that it's just useless. It has its place, but the way my brain works, I can't trade that way. I need exact entry points, and I look at the market in a completely horizontal manner. I don't want to know about trend lines. I don't care. I don't want to know about Elliott waves. That doesn't work. Works in hindsight. You know, Elliott waves, like perfect example of hindsight capital. They're like, oh, A, B, C, X, Y, Z, Q, R, P. And then they go, well, no, actually, we were wrong. So, no, that wasn't the B leg. That was actually a C leg from the much larger time. It's like, shut up, man. Just go away, you know. So for me, that's very wishy-washy, old-style thinking. We have so many lovely tools these days. We have Bookmap, we have Dome, we have electronic markets, we have order flow, we have supply and demand zones, order blocks, like call them whatever the hell you want. They're all the same thing. They are actual price action events that will get revisited because they represent liquidity, aside from whatever pattern they create in the process, right? That's my thoughts on it. Like I said, you do you. This is just me. I'm not telling you what to do. I'm just saying that for me, that didn't work, okay? So therefore, I naturally gravitated towards things that were systematic, that can be easily quantified, that can be easily scored. So yeah. Yesterday's bullish, to go back to your question, yesterday's bearish engulfing on gold means nothing when you have all-time highs, okay? It means nothing. So one thing that I look for in a bearish engulfing, never mind the head and shoulders thing, I look for whether the edge of that supply, because it's a newly formed supply, whether it's reactive. It wasn't. We smacked right into the level, and now we're halfway through it. What is that? It is a range. Why do we need to complicate it by saying it's a head and shoulders pattern? It's a range. We have a range. We have a low, we have a high, and we have a supply up here. We have a demand up here. Much simpler, right? X, Y, Z, A, B, C, P, R, Q, and all of those things, and head and shoulders, and bats, and dragons, and dogs and cats and whatever other pattern you want to come up with. I don't want it. To me, that's overcomplicating things. Some people think that that's like, oh, it's simple. Just look at head and shoulders. No, to me, that's the complicated part. But again, I'm me. I do everything the opposite way to the rest of the population because I'm a left-handed person. And I've always done everything the wrong way around. So yeah. But I'm just saying to you, that's what didn't work for me. This worked for me, this sort of analysis of, having an order flow level, looking at how we approach the level, whether we react to it or whether we go into it fairly aggressively and therefore we either smash through it or we shy away from it. That's what I look for, right? Much simpler. Platinum, we have that 1050 level approaching fast with some fair number of contracts here at 42 contracts is 1050. So I'm guessing this is probably going to get broken through. Then I may have a reversal. So I'm still looking at that platinum short potential around that 1050 area. So that is the only thing that I'm seeing right now. That copper trade did not quite give me the pullback that I was looking for. So now platinum looks a little bit better. But again, I'm going to wait until it actually reverses and until I get a proper signal. Because with reversals, I don't necessarily like to front run them. Platinum is a slow product. You don't need to front run anything because you've got ample time to decide, right? And I'm sorry if that was like a bit of noise. My deaf King Charles Cavalier decided he's going to do an honorary lap around me in the office, and then he did that 3 times and then wanted to get out. So if there was noise and clicking of the pause, that's what it was. I don't know how much this mic picks up. All right, so Paul H. Oh my God, Paul H. Are you the guy that we're going to be on today? I think so, if you're the same Paul H. So yeah, he's going to be on with Trade with Topstep today at 1 p.m. with myself and Coach Jay. So he has a question. You have a great breakdown of the mechanics of crude. Where do I go? Books I can read to get the same info for other markets. Honestly, I don't know because those are my concepts, right? So you can go to my books. I explain in Day Trading for Income, which was my second book. Again, it's just self-published on Amazon. It's not like, I'm a published author or anything. It was just like a little project because people wanted me to explain stuff. So the simplest way to start with my concepts, which again, I have not found anywhere else. That's why the books exist. That's why the course exists at the end. The profile stuff exists, but some of the other stuff relating to the session ranges, times of day, post and my cut, that you're not going to find anywhere else apart from my teachings. Well, maybe now once we now have a bigger audience and stuff, but generally those are my concepts, right? Reversals, setups, failed auctions, auction fades. That's my concept. Neutral day fades, sort of a twist on the range-bound market. All of that you will find in my Day Trading for Income book. So you look for market stalkers. I always go under that name because it's not just me, but it's always a group of people that I work with and that have helped me to come up with the system and to come up with the concepts. They've helped me to run through some statistics. Now we have Edgefall. Back then we didn't have that. So I had a small team, still have a small team that can test those stats for me. So that's where you can read about those sort of behaviors. Now, when I talk about those behaviors, I generally reference GC and CL. So those are the 2 products that I've worked with the most. And that is what I know to the core. Okay. All right, let's do some plugs, guys, and then I'm going to let you go. Let me have a look at the day. Where are we? Here we go. All right, so what do we have today on the main broadcast? We have Aaron Ellis joining us at 11 a.m. Central today. He is a funded trader and a Canada reality TV star. It's some reality TV that's called Traders. I'm not Canadian, so obviously, I don't know what it is, but actors are always pretty fun to interview, so looking forward to that. We have Trade Live on TV, so I think we're going to have Paul H joining us today, so he probably filled out one of these casting calls, which I'm going to drop into the chat now. Yeah, so Paul H, he's going to see me later. Okay, nice. Looking forward to that, actually, because I saw Paul on his other segment when he was on. That was brilliant. Very much looking forward to that. We have phone support, guys. Topstep is back in the 90s, it seems. But people asked for it. We have phone support, so now you can actually call up and and actually talk to a live representative. So bypassing the whole Windy thing or whatever. Windy, is that the name of the AI chatbot thingy? So yeah, you can call us at 1-888-407-1611, and you can talk to people if you have a question. Just don't ask about resets. Okay, just don't do that. Otherwise, they're going to get very annoyed with you. So don't ask for resets. If you have a true problem, that's when you need to contact them. And then finally, if you like what we're doing here, make sure to leave us a review on Trustpilot if you haven't done that already. And again, that's another link in there. Ricky Norris says, I prefer chat support. Me too. I absolutely hate talking to people on the phone. I don't know why. I think I have an aversion to the phone from the time when I was a musician. So my phone was just blowing up all the time because I had bands. I had various bands. There was a session musician gig. Then I was doing my own thing as well, and it was just like, so over the years I just developed a huge aversion to like my phone ringing. I literally just start getting all antsy as soon as I hear that. Blue Boy D says, Bookmap, by the way, is the same thing as looking at the order book / DOM. Yeah, absolutely. It's the same type of data, but it's just easier to digest in real time what's going on. So, and Blue Boy D on the money says, before then, you'd have to remember where the big order kept popping up and popping in. Bookmap eliminates the memory needs. That's absolutely true. Someone on my YouTube channel called it a cartoon version of DOM, and that's exactly what it is. But hey, I like cartoons, you know, I play video games, I like animated films and stuff. What's wrong with a bit of animation, you know? I don't see a problem there, especially if it's going to make our life a little bit easier. So, you know, I always find it like it's a bit of a weird flex to go, oh, well, I can actually read time and sales and DOM without Bookmap. It's like, well, whoopee, well done. Anyways, guys, that is it for today. Thank you so much for hanging with me. No coach Ray today. He had some previous engagements, but we'll have him on back next week. We're going to try and drag Anne-Marie over again. Fingers crossed. Again, nothing is confirmed yet. We're still talking. So there is a chance that she may join us if she can find a little bit of room in her schedule. Make sure to click the like button. And if you are not subscribed yet, please subscribe to the channel. Also check out my links below the video. Subscribe to my channel as well, Shock Horror. I do have some, so my channel is more informational, but it's more like humor oriented. So keep that in mind. I do bring up some relevant issues, and I also sometimes make fun of the prop firm payout rules. Because it's getting beyond comedy at this point. So yeah, I just thought that was a funny point to make. So yeah, my channel has always had like a bit of a humor side to it. Well, a lot of humor in it, because I think that we take ourselves a little bit too seriously sometimes. So let's keep in mind that trading should be fun. The business should be fun, right? And let's not over dramatize the losses and over glorify the wins, because at the end of the day, whenever you're trading, any single trade outcome is just one drop in the bucket of thousands of trades that you're going to do in your life as a trader. So don't get too obsessed. Control your risk, and then it won't be a problem. Control your size, control your risk. Don't rush. Have you got a train to catch? You're supposed to be doing this for years on end. Why are we rushing? So slow down, chill out, take a deep breath, and let's see what the rest of the day brings. Thank you for being with me. Have a good rest of your day. I'm Deeyana Angelo. This has been TopstepTV London session. Take care.